Good morning, everyone, and thank you very much for joining me. This is the morning market review. My name is Russell Shaw. I'm a senior market specialist at FXCM. Today is Wednesday, it's the 5th of April. Please take note of my email address, rshaw@fxcm.com. Go ahead and bring up the disclaimers. We'll start off with a high-risk investment warning. I'll keep this on screen for a few moments. Let's just go ahead and bring up the commentaries disclaimer. So we'll have a shortened morning market review because at the top of the hour, we'll do our crypto minute, which everyone is welcome to join me for. I also want to just remind everyone on Friday, the non-farm payrolls will be released. We're going to be doing a live trade there. I've put the link in the chat. So go ahead and register for that if you would like to join us for that. So it's a live trade on a live account. Hey Howard, very nice to have you on the webinar as always. Thank you for joining. The last two non-farm payrolls, maybe the last three, have been pretty good. So we'll see what this one has to, see how this one goes. In terms of our references, MarketScope 2.0 and TradingView, I want to bring up this chart here. This is actually the JOLTS data. JOLTS data was released yesterday. It's basically the amount of job openings, and we'll just take a look at it very briefly, and then I want to look at gold because gold's broken the 2000 level. But one of the concerns that the Fed has is of a tight labor market, and it does look as if the interest rate hikes are having an effect, because we can put in our peak. If we apply sort of technical peak and trough analysis to the JOLTS data, you can see we've got the trough, and now we've actually got a lower peak here. So it does look as if the trend for job openings is now down, right? We've got that lower peak followed by the lower trough. And we can actually even put in a trend line here just to monitor the sort of momentum of the trend. But it does seem to me that there is a cooling off in the labor market. Something else that's worth noting, industrial production came in lower than expected, and then we had the manufacturing PMIs on Monday, which came in lower than expected. So by and large, there does seem to be the slowdown. This afternoon, we're going to get the services PMI. The services PMI is more important than the manufacturing PMI for the States. The States is a service-based economy. So we want to watch that very carefully to see if there's any sort of slowdown there. But I just wanted to show you this is a very interesting development. One thing to mention about the JOLTS data is that there's a 2-month lag. So it stopped under 10 million for the first time since July 2021, but we're only looking 2 months back. Okay, so the JOLTS data has a lag to it. So just keep that in mind. All right, let's pop this down. I'm going to take the JOLTS data out. I wanted to show you guys that. Here is the gold chart, and we've breached 2000. 2000 is what we call a psychological level, and it acts as resistance or support. Generally, around these round numbers tend to act as. So we're at this kind of round number, and we are at a level where we've hit it twice previously and been rejected. Nevertheless, there is a strong momentum that is driving gold at the moment. So this is one that I think is worth keeping on the watch list. On the monthly chart, you can certainly see that we've got this very strong psychological resistance around 2000. And the all-time high here is 2074. So we're in sight of 2074. 2074. All right. So let's just bring up the weekly chart here. And let's put in some peak and trough analysis. And you can see that when we put in the, let's take this LT out. Okay. And when we put in the trough, peak, higher trough, higher peak. Okay. Take a look at the RSI, how the RSI is now nicely above the 50 level. Okay. And as long as we hold above that 50 level, well, then we're on the bullish side. We're on the bullish side of the oscillator. And it doesn't really matter if there is a pullback in terms of the trend, okay? As long as there's higher troughs and higher peaks, the trend continues. So sort of pullbacks at this stage of the game would be compelling. Where it would get concerning is when we get something like this. That would be a change in trend. You see there you'd have your lower peak followed by your lower trough. So the peaks and troughs here are trending up nicely. And if you take a look at this on the daily chart, you can see that the daily chart has moved into zone 1. And not only have we moved into zone 1, take a look at the stochastic. The stochastic has moved into the upper quintile. The best moves tend to happen when the momentum is in the upper quintile. You can see there is a very strong move. There's the stochastic in the upper quintile. So we're in the upper quintile, and I wonder what's going on here. Let's just talk about this in terms of the underlying fundamentals, right? The underlying fundamentals are important. To that, we're going to go back to this chart here. We'll go through to the daily chart. And the first thing I want to show you is the 2-year yield. So let's go ahead and bring up the 2-year yield. Okay, and I'll put that underneath. And you can see really from this area here, this is where the correlation gets very tight. Let's change this to a full line. So you can see from this orange line, which is when the VBS failure became news, became topical. The market then started pricing in the end of the rate hiking cycle. It then started pricing in rate cuts. It's pushed down. Gold's benefited as the yield has come down. Let's just talk about this in a little bit more detail. When we're talking about gold, we're talking about a safe haven. And there's effectively a competition in safe havens between bond and the precious metal, right? So if you wanted to put your money into an area where there is some sort of safety, you would consider bonds or the precious metal. But if you put your money in bonds, you have the added benefit of receiving a payment, a coupon payment, right? So the fact that the yields have started to come down, that interest rates are starting to come down, it means that coupon payment, that interest received component, has become less important in terms of a safety portfolio. In other words, gold has benefited from the yields coming down because the opportunity cost of holding gold has come down as well. Now, another way that we can look at gold is, let's take out the 2-year, let's throw in the US dollar underneath, okay? You can see here how the dollar and the gold price are inversely related. Okay, let's just throw in a correlation coefficient as well, and then I want to take a look at gold in particular in terms of XAU to USD. Just bear with me one moment. Let's throw in the correlation coefficient. Okay, let's make sure it's looking at the US dollar. Okay. And what you're going to see here is a very strong inverse correlation. It's at 93%, minus 93%. In other words, as the dollar falls, so the gold price moves up. That's not a surprise. If you take a look at the way that gold is actually priced, it's priced XAU stands for 1 troy ounce of gold. USD is it's quoted in US dollars. This is almost like a currency, isn't it? With XAU being the base, USD being the quote. So as the quote comes down, as the denominator, the US dollar in this case is the denominator, as the dollar comes down, XAU, the numerator, moves up. And you can see we've got a very strong inverse relationship here. Minus 93% is extremely robust. Okay, let's take a look at just one more chart here. And I want to go down to the hourly. And you can see what happened yesterday when the JOLTS data came out. And we saw that weakening in the JOLTS data. We also saw that industrial production come down. Well, gold sparked. Gold sparked. In other words, now there is another factor that's setting in. There is the threat of recession. The data is starting to come in weaker. We mentioned earlier, manufacturing PMI, industrial production, JOLTS. Today we get the services PMI. The weaker that data becomes, the more the fear of we're heading into potential recession. If we're heading into potential recession, gold is the world's oldest store of value. Okay, becomes very compelling then to take a look at gold as part of a store of value, store of wealth. And you can see that that was shown yesterday in this big spark up. Gold moving in this northeasterly direction. Now, let's just bring up the US dollar, because we did see that the US dollar has that inverse relationship as well. Okay, and the dollar, if we go through to the weekly chart, has this big topping pattern on it. Left shoulder, head, right shoulder. I've put here the pattern completion gap because the pattern's still to complete. But I wonder what happens if rates carry on coming down. If the US dollar carries on coming down, then we've just crossed $2,000 in terms of 1 troy ounce is costing in excess of $2,000 US dollars. How far up can we go? So now we can take a look at this in terms of the topping pattern in the dollar. Now, if this is a topping pattern in the dollar, we go back to gold. Then this 2074 level over here becomes critical. And if we pass that and the dollar pushes down, then that 2074 becomes not a psychological resistance barrier, it becomes a psychological support barrier underneath us. We got that right inside now. So we want to be very, very, I think, interested in this chart. I think we want to add it to our watch list and keep an eye on it. All right, so I just wanted to cover JOLTS and gold for today. If there's any questions, please go ahead and type those in. I'm just going to paste the link to the real trade. We're doing a live trade on a live account on Friday. That's for non-farm payroll. I know it's a public holiday in some regions, but there is going to be a non-farm payroll release on Friday, so we will trade it. So please join me for that. All right, I think what we will do is conclude at this part, and then we will continue again in the Crypto Minute. All right, guys, thank you very much for joining me this morning.